Today I'm going to talk about the importance of one-to-one risk to reward trades and moving your stop to break even accordingly when taking a prop firm challenge. So this is the trade that I took on the AlphaTix platform using ICT concept. As you can see, this was a one-to-one risk to reward. I took a buy on the Nasdaq during PM session and my final TP was up here at this swing high, but as you can see, we didn't reach that. So this is emphasizing the importance of when you are a beginner or when you're managing your risk accordingly, especially when we're in choppy market conditions like we were here. It's really important to take a large amount of your contracts off at one-to-one. Not only does this help you manage your capital accordingly, it also kind of takes away that risk and builds your confidence in your strategy, as you will have a higher win rate. So my thoughts behind this trade was I initially went into PM session with a bullish bias, so I wanted to wait for a setup to buy. As you can see, we didn't make it to my full TP, but I did manage to catch this buy right here. So I usually start looking at the markets at around 12:30 and I will trade around the 12:50 macro. And I saw here that we traded inside of this 15-minute buy side and balance sell side inefficiency. As you can see, I've marked out. We traded inside this and left some SMT with ES at the lows. SMT to me usually indicates that we're going to have some kind of reversal. So I was then anticipating a setup to form. We also have this manipulation leg lower here. ES took out this 1132 low and the Nasdaq did not. So I drew out the SIBI in this manipulation leg and I was waiting to use this as an inversion fair value gap entry. And I also used a change in the state of delivery for extra confluence, which we did have here, as you can see. So we created this SIBI, traded up through it, inverted it, change in the state of delivery. I was then happy to take an entry. So I waited for price to retrace into this inversion fair value gap, and then took a buy. I bought 3 contracts on the Nasdaq and took 2 off at one-to-one risk to reward here. The plan was to leave 1 contract on to run up to this high, but we unfortunately didn't make it, so I was stop break even. I took off 2 of my contracts 4 minutes into my trade, so within 4 minutes I was completely risk-free and I'd locked in some profit. Using this approach has really helped my trading psychology overall as a beginner. So for my second trade, I came onto the charts bearish and was looking for a short. I was initially looking on Nasdaq, but as you can see, we have this SMT at the 1040 high, which the S&P 500 actually didn't sweep, so therefore ES was more bearish than the Nasdaq. So I actually took this position on ES. This was my first time ever trading ES, so I did get in late and end up only getting a one-to-one risk to reward trade. However, I'm still happy with how it played out, as this was my first time trading ES and I didn't really understand how many contracts you needed to place in comparison to Nasdaq. So in terms of the structure of this trade, we tapped into a higher time frame bearish fair value gap and had a nice rejection downwards with this SMT, which is put in place. As I said before, I start looking at the charts during that 1250 macro. So as soon as I came onto the charts, within 5 minutes, we had some SMT. And within this manipulation leg, I could see that we have a nice buy side imbalance, sell side inefficiency, or a bullish fair value gap. And we also have a change in the state of delivery, which I've drawn out as well. So we traded through the bullish fair value gap and then tapped back into it. That was meant to be my entry, but I did get in a little bit late due to the contract sizing. So yeah, I took shorts and took all of my profit off at this low. I didn't feel that price was going to go any further than this, so it did end up just being a one-to-one trade. And as you can see, as soon as it hit my take profit, it did reverse in the opposing direction. So a one-to-one was needed in this situation. When trading, it's always important to practice proper risk management, especially when trading with prop firms. This will enable you to build confidence in yourself and you trust yourself and your own model. Thanks for watching this video. Make sure to like and subscribe.